So that you need to know that purchase consideration. What is a purchase consideration? So a purchase consideration is the amount paid. Is the amount paid. That is amount paid by the parent. Amount paid by the parent to acquire the investee company. To acquire the investee company. To acquire the investee companies. To acquire the investee company. So it can be a subsidiary, it can be an associate or a joint venture. So the amount which the parent paid to acquire or the investee companies. Then the next thing you need to know is what about net assets. Net assets. So the net assets. Paris, please mute yourself because I'm doing this. Mute. Ah. So I was saying that so we were talking about net assets. So the net assets now, the net assets. So the net assets, these are now the equity components. So the equity components, I think you know them. So you know the equity components. So the equity components, these are ordinary share capital. We have a share premium. We have things like reserves. So we have the reserves. We have things like the retained earnings. So those are the equity components, of which when you are dealing with the goodwill, when you are computing goodwill, the reserves you have to use and the retained earnings must be as per acquisition date, when the relevant subsidiary or another investing company was acquired. So those are the equity components. So those are the equity components. So we have said that goodwill is all about the economic benefit expected from an asset, of which you can't separate goodwill from the business. Then goodwill is all about the purchase consideration. You minus the share of net assets. Then purchase consideration is the amount paid by the parent to acquire the investee companies. The net assets, these are equity components. You know the equity components. Then the next thing I have to mention is the methods. The methods which you are supposed to use to compute this goodwill. So Bernard, which method can you use to compute goodwill?
Full method and partial method.
And the partial method. On which scenario do you know that you are supposed to use full method? Because the examiner will never tell you that use full method or use partial method.
When you're given NCI.
But now to be specific, fair value of NCI.
Yes.
So the full method, when you are using now, when you are talking about the full method of computing goodwill, so the full method, you must be given, you must be provided with. You must be provided with what? I've said the fair value of the NCI. So the NCI must be measured at its fair value. So that is the full method. So when I talk about full method, so I was talking about the full method. So under the full method, in order to use this, so sometimes we call it fair value method, fair value. We call it a fair value method. So when you are using the full method, you must be given the value, the fair value of the NCI. So that is the NCI must be measured at its fair value. So NCI, non-controlling interest, that is NCI must be measured. NCI must be measured at its fair value. At its fair value. And the goodwill you will get out of this. So the goodwill will be attributable. So the goodwill you are getting from using of full method will be attributable to parent. So the goodwill will be attributable to parent and the non-controlling interest. So I've said in order to use the full method, the NCI, non-controlling interest, must be measured at its fair value. So you must be told that the fair value of the NCI was a certain figure. Then the goodwill you will get out of the use of full method will be attributable to the parent and the non-controlling interest. Then number two now, another method, we call it partial method. So the partial method. So we have the partial method. So the partial method on this scenario, the partial method, this one, you can't find that. You are told that the NCI fair value is this one. So that's the NCI will not be measured at its fair value. So the NCI will not be measured at its fair value. So this statement will miss in your question. So they can't provide that the fair value of the NCI was this value, of which under partial method, the goodwill is attributable. The goodwill is attributable. The goodwill is attributable to who? Bernard? To?
Sorry?
When we are using the partial method, the goodwill is attributable to,
Yes.
to who? To the parent, to the parent only.
Yes.
Yes. So since we have said that use of full method, goodwill is attributable to the parent and the non-controlling interest, under the partial method, the goodwill is attributable to the parent only. It's attributable to the parent or
Yes.
only.
Only.
Yes. So now the next thing I can do is a short format of the full method. Then partial method I will explain from the full method itself. So let us draw a short format on how you are supposed to do the full method. Then I will explain what concerns the partial method. So this is all about the format on how to do it, because some of the lecturers sometimes you will find that they are using the cost of control, the T account. On my classes, I always avoid the T accounts. So I always do direct. So the format. So this is the same as the COC, the cost of control, but I'm avoiding that T account. I'm doing direct. So I'm avoiding the cost of. So that is COC. That is the cost of control. The cost of control. So when I talk about the format, remember that we have the parent on one side, and we have the NCI on the other side. We have the parent and we have the NCI. So you have to start from.
Sony Kagwa. Eh? Sony. Sony.
So please mute. Winston mute. So on this scenario, you start from the what the parent paid. That is a cost of investment. You start from the cost of investment. So the cost of investment, we call it sometimes purchase consideration. We call it purchase consideration. We call it purchase consideration. Then next we talk about fair value. We talk about fair value of NCI. So fair value of NCI, you have to record under the NCI. The next, we have to raise the share of net assets acquired. Share of net assets acquired. Share of net assets acquired. So the share of net assets acquired. So the share of net assets acquired, remember that it's now things like ordinary share capital, ordinary share capital. You have to deal things like share premium. You have to deal with the reserves. You have to deal with the reserves. Then you have to deal with the retained earnings. You have to deal with the things like retained earnings. So in this scenario, let's say, for example, on this, I was computing a goodwill on which A acquired B up to 80%. Remember that on this scenario, the percentage which is not acquired in B is 20%, 20%, which is an NCI. So when I will be doing my ordinary share capital, 80% of the figure of the ordinary share capital, let's say ordinary share capital you were given in a question is 200. So of the 200, 80% will go to the parent, then 20% to the non-controlling interest. Then the same with share premium. Then now reserves, when you are doing the reserves and the retained earnings, the reserves and the retained earnings, the figure you have to use here must be as acquisition debt. They must be as acquisition debt. So when I say as acquisition debt, the debt when the parent, like now, if A acquired B on a certain date, as at that date when A acquired B, you must be provided with the retained earnings and the reserves as at that date when A acquired B, of which, if it's not provided, you have to know how to compute. That one I will show you in a question scenario. Then the next thing, so after getting that one, you have to share to the parent and to the NCI. That is to the parent and to the NCI, so that you rest from the cost of investment and the relevant fair value of NCI accordingly, so that you get the goodwill. So once you have the goodwill, you have to sum the two so that you get the net goodwill. So once you have the net goodwill, a certain figure there, so from your net goodwill, so once you have your net goodwill, let's say you have a net goodwill after adding the goodwill of the parent, what you have down there, and that of the NCI. So after you have the net goodwill, after you have your net goodwill, let's say now you can raise impairment. So once you raise impairment, you have your final goodwill figure. So the goodwill will be taken to the non-current assets. That is, it will be taken to the non-current assets. Then the impairment, it will be an expense. The impairment would be an expense. So the NCI on this scenario, remember that it was 20% of which I've explained about it. So that is all about the full method. What about, let's say it was partial. So if it was partial, you can't find this. So that one, fair value of NCI will not be there. So which means that this column will not be there. So you will be dealing with only the parent. You will be dealing only with the parent. And that is what you need to know under the goodwill. Any question? Bernard, then we move to Winston. Any question concerning goodwill? Any question? Or any inputs concerning of what we are doing?
Okay, my question is,
Mm-hmm.
you said reserve, both reserves and retained earnings,
Mm-hmm.
we consider as that acquisition date,
Yes.
both reserves and retained earnings.
Yes, you have to consider the figures you have to use there is the one which must be provided, or you have to compute as acquisition date when the parent, as at the date when the parent acquired the relevant investing company. Like now in this scenario, I'm saying that A acquired B. So when was B acquired? On that date when B was acquired is when you have to determine the reserves value and the retained earnings value, so that you multiply with 80% and 20% respectively. Another question, is that one clear, Bernard?
Yeah, very clear.
Another question?
No.
Winston, you can bring an input on what we are doing. Maybe if you don't have a question also, you can challenge me.
I don't have a question.
Oh, so you are okay.
I'm okay, Modim. I'm okay.
I'm okay. And I think the quality of the video on the other side is clear and everything is okay. You are understanding the like a normal class, eh?
Yes.
Yes.
Yes, yes.
Yes.
Yes, I'm understanding, Madam.
Yes. So this is what I will be doing from today up to the time we will be doing your exam. Eh?
Okay.
Yes, Madam.
Yeah. So we will be having around 3 classes or 2 classes per week. I will plan myself well so that we have classes during the evening when you are free. Eh?
Okay.
And I think Winston,
Yes.
you will commit to this class. Eh?
I will, Madam.
Because already Bernard,
I will.
your colleague has already committed. Eh?
Yes,
Aye. So before we
I
are
will.
rocked out, I think this is what I was explaining.
I
Goodwill
will.
purchase consideration minus share of net assets acquired, where the purchase consideration is the amount paid to acquire the subsidiary. Then share of net assets, that is equity components acquired in the subsidiary company. Example, preference share capital, ordinary share capital, or other reserves. So that one I've explained fully. Of which I've said the methods of determining goodwill. Full method, we call it fair value method on some scenarios, or we have the partial method. Eh? So full method, under that method, goodwill arising on acquisition of the subsidiary company or another investee company. It must not be a subsidiary only. It's attributable to both the parent and non-controlling interest. That is I've explained. Then for full method to be applicable, then CI must be stated at its fair value. I've talked about it, and also Bernard answered my question. So of which I've showed you on how to draw this on a whiteboard. That one is clear, so that I can be able to say this. So you can see here we are getting a goodwill from, that is the one which is attributable to the parent and the one which was going to the NCI. So once I have
Yes.
my total goodwill, remember that in your exam scenario you will be told to impair it. So you have to subject your goodwill to impairment so that you get the net goodwill. So this impairment is an expense. That one we wrote to the income statement. Then positive goodwill, positive, not negative. Positive goodwill is an non-current asset. Negative goodwill is an income. Aye. So I'm talking about partial. Under this method, goodwill arising on acquisition is attributable to the parent company only. So of which on this scenario, you can see that the goodwill is only attributable to the parent. I have drawn this, so which means that there would be no NCI. So which means that in order to use this method in your question, you can't see an additional information of which they are mentioning that the fair value of the non-controlling was a certain value. So that one will miss. So the NCI will not be measured at its fair value. So the goodwill using partial method will only be attributable to the parent company. So of which the same scenario, net goodwill is a non-current asset, impairment is an expense. So this is an illustration. I think this illustration, we can't do it in the next 3 minutes, but we can be able to just interpret it. Then we do it. Once we are logged out, you log in again so that we can continue. So this one, they were saying that Auma Limited acquired 80% of the ordinary shares of Sakwa Limited. Auma is the parent, acquired 80% of the ordinary shares of Sakwa Limited on 31st October 2010 for shillings. That is 117 million. So this 117 is what? So you can see that Sakwa is what? Sakwa is a subsidiary to Auma. Auma is the parent and Sakwa is a subsidiary because it was acquired up to 80%. So Auma paid 117. So this 117 is?
Cost of purchase.
Yes, that is purchase consideration, or we call it cost of investment. As at that day, the net assets of Sakwa were 127.5. So on this scenario, remember that these are just an extract. So you are not given a statement of financial position. So when we are given a statement of financial position is when we always go to that statement of financial position under equity. We check ordinary share capital, share premium, retained earnings, and some reserves. But now since this is an extract, that is why we have been given the net assets, the equity components as a block figure. So then you are told the fair value of the non-controlling interest on the acquisition date was shillings 28.5, which means that you will use which method? When you see this statement, fair value of the non-controlling interest on acquisition date was 28.5. Which method is applicable? That is full method. So, but now on my case, I will use this example to compute both for the full method and partial method. So I will use that example to compute for both full and partial. So I think that interpretation is okay. So now we can compute it. We can do it on the whiteboard. We can be able to do it on the whiteboard. So I can see it's around 1 minute left. 1 minute left. So calculate value of goodwill using the two methods, that is full method and the partial method. So that is the full method and partial method. So can you be able to compute that one and give me the answers in the next 2 minutes? Once you log back with answers.
Okay.
Yes. Winston, are we together? Winston? Winston, tuko pamoja? So I'm saying you try the question, then once you are logged out, you log in back with answers, because I will be doing this question on the whiteboard. So 2